Hi, today is Monday the 29th. I'm still recovering from my cold, but I've got enough of a voice to record this video. It's going to be short anyway. On Friday, we had that very sudden fall, probably a COVID scare, and probably not that justified, but we knew for a while that SPX VIX correlation was bound to happen and it would be kind of brutal. So the market fell below 4600 on Friday. Volumes were not that important, so we'll see how the market unfolds today, but we will have to check the volatility level, in particular if VIX stays above 25 or not, because it could justify a second sell-off. Now let's go to our trade. This is December. December is holding okay. It's got only 18 days to go and we have sufficient room on the downside. And if I was to keep it to expiration week, we know we've got the 2SD that is around here. So it's probably safer to go for a bearish risk reversal. I know we've lost a bit of money on rolling the call credit spreads up, but at this point I believe the upward potential is fairly limited, so I am inclined to close them and maybe place them a little bit lower, like 48.50. So that would be something like this, and I would get a little bit of a credit to either close this PCS. It would make the trade look nicer and better, and as you can see, I would probably conserve some of the profit potential. Otherwise I can leave it there knowing that it's still fairly safe and just push this further up around here. It would actually lose a little bit more, but we would have a good looking, very low capital consumption type of trade. So that's something I have in mind, either closing this PCS here or moving this one up. Doesn't have to be that far up, it could be here. It would still be okay, 7k. And the reason is that towards the end of the trade, I don't want to use too much capital into the trade. Having -3 would be good. Lowering the Vega exposure on the downside would be also pretty good. So that's something I would have in mind. If you are concerned that the market could bounce off quite abruptly, then I would suggest putting the CCS up here. In any case, this is fairly safe. The delta would be okay, Vega exposure on the downside. And although we were a bit concerned because of the poor SPX VIX correlation, we were getting a bit concerned about Vega on this side, because we had like market up, VIX up. But if mean reversion materializes, this should be less of a concern, especially 2 weeks to expiration. So this is basically some form of bearish risk reversal. Now on January, the trade has suffered a little bit more than expected on the downside, even though the trade was started fairly conservatively with a mix of balanced flies and broken butterflies. At this point, and again I will check VIX for guidance, but at this point I would be tempted to drop one or two of the upward broken butterflies that I put on early at the very beginning, and then placing one or two, maybe somewhere around here, wider ones like here. So of course we would lose quite a bit here. So maybe, and I understand that closing the upward broken butterflies, which I probably got for a 35 to 50 cents credit, and now if I would sell them, they would probably, you see, 1 point. So I would lose a little bit on these ones, but that's fine, that's still okay. Now I can maybe just close one and placing one here. So it's kind of a rollback, just safer, because I would be using the high volatility to take advantage of good pricing on this wider broken butterfly. So this is something I have in mind, just a mild rollback. It could be 2 and 2. We will see how it goes. I will also, of course, look at how not only the volatility, but also liquidity this week. Okay, that is it for now. As I said, there's not much to do, just a gentle rollback, a bearish risk reversal on December, and the trades are still fairly safe overall. Thank you for watching, and again, if you're not on the Rhino Slack, please drop a message and I will send you an invite. Have a great week. Bye for now.